Hi guys, thanks for tuning in to another episode of Nuggets News. Well, it's a Monday. I did have a crazy busy day yesterday. It's been a huge week. I think I'd had a couple of hours sleep and I was falling asleep at the driver's seat here finishing the video. So look, I thought I'd put it off. It's great to be this busy, guys, but I think it's only the third or fourth time in maybe 3 years, 4 years that I've missed the Sunday video for that regular routine. So look, I did put out a bit of a flash update that I like to do sometimes for our group, and I put that out for everyone with a few little metrics as well. So check that out. And I guess thanks to everyone that's joined us this week. We've had over 2,000 new subscribers this week, and that has pushed us past that 100,000 mark. So a little bit surreal. Most of you know that I like to take things one day at a time, get up, read the news, and do my job. And I think good things will happen if you work hard. And this really was such a far off dream. Even a year or so ago in crypto winter, we were stuck at around 30,000 subscribers for so long. I just never thought we'd get here. So look, it is awesome. I thank you all, each and every one of you, whether you watch one video here and there or you watch them all, smashing the comments and the likes and helping us all grow. Hey, here's to the next 100. I'm going to keep making videos as long as there's interesting things to talk about. And we're going to keep making free content as long as we can. So a big thank you in particular to our premium members, because without you guys, none of this is possible. And we've had a lot of people join recently just saying, after a year or two, I finally took the plunge and, I can't believe I didn't sooner. I think a lot of people still don't understand that YouTube is a tiny part of what we do. I've got 24 staff now. We've hired 2 more. And these guys just power out the content, the research. So whether you're a beginner and we're just putting the final touches on this massive beginner's course, it is in beta, so you can share that around with all your friends and family already. Now, this is finance and economics as well as everything crypto you need to know, all the way up to our higher tier pro members. Look, without this, none of it is, without you guys, none of it's possible. And I'm just so lucky to be able to do what I love every day, as I think I said this week. So look, without further ado, let's get into that local news. And we had a bit of a scare this week in Australia with South Australia going back into lockdown. It turns out it wasn't so bad after all. There's rumours of a super strain. Others are saying, that's just rubbish. Either way, look, Australia has been pretty lucky in recent weeks getting our numbers down and being able to get back out of lockdown in most instances. In terms of real GDP growth, we're actually still negative. There's a lot of countries that are worse than us, but I think it's important to remember as we head into Q3 here, we haven't got our results just yet, but a lot of those things that Australia had at its back, those tailwinds, which we're going to talk about tonight, are no longer there. And the changes that we're making aren't addressing those. So Martin and I did our deep dive on Friday, if you want to watch the regular video, but there's a few other things I just want to mention. So I think we said that this would happen in our documentary as well, that once you stop the big turnover of property, they're going to look to phase out things like stamp duty and go to a yearly tax so that everyone that owns a property will pay some sort of tax. And that maybe makes property less attractive as an investment. I'm not sure. It all depends. But I actually think that they're panicking too early, because the changes that are now being made are probably going to pump the property market even higher. So this is some outlooks from the government's report here into superannuation, and they're assuming 4% per year wage rises. This is long run. I'm really not sure where they're getting these numbers from, as Alex Joyner says here. We haven't had wage growth in over a decade for the average person. And once again, we get these numbers in very, very weak. This is not what the RBA want. And all of a sudden, the RBA have done the biggest backflip of almost any central bank, but they're about to complete it and go to the top of the list. Look, this is circus level sort of stuff, guys, backflipping here. RBA governor says that the economic recovery needs risk takers. What sort of language is this when they're telling people to take risk? That's pull your money out of the bank. You're not getting a return there. Speculate in the market. They're the sort of subliminal messages that they're being pushed here, and that is just completely against, I think, Phil Lowe's nature, and that's why it's coming across as unnatural. And it's going to get messy. It is going to get messy. You just can't tell people in the current conditions that we are in globally to take more risk and speculate and everything's going to be okay. And by doing so, I think they're almost guaranteeing that they are going to print money into oblivion and have the stock markets back, like when we get into all the US news. So the RBA can't resist the gravitational pull of lower interest rates. One thing we've been talking about is that they're going to do what everyone else does. Because they're not innovators that are going to think of new, unique things to do. They're just going to follow the map of what all economists do, because that's the tools that they think work, and that's all the tools that they have. But we've been saying that they're going to go to zero. They're going to start printing money. And Phil Lowe's been saying, we're not going to do that. It's extremely unlikely. He's been saying the same thing about negative interest rates. And literally, here we are now, a week later, the language is changing. We would rethink negative rates if our global peers went negative. And we know that the Bank of England, it's not just the fringe countries anymore that you're hearing about. It's all the big ones. New Zealand have said that, they've got to contemplate it. America, I think rates are going to go negative there. There's just no exceptions with the amount of debt that we have globally that you're just going to be able to have high interest rates, and that things are just going to get better in terms of the economy. It's not going to happen, and Australia is no different. We are going to have negative rates unless central banks do things stupid to the point where we get crazy high inflation. So this is another great tweet here. Follow Alex Jordan if you don't already. But what he's sharing here is that Germany have gone down this path where their housing boom is accelerating. They're in a recession, the same as us. All this policy interventions, wages aren't going up, their economy is struggling. But guess what? House prices are going up 7% year to date. This is exactly where Australia is going. And if it just, it's common sense. If people aren't getting a wage rise and unemployment's going up, people losing their job, how on earth can houses possibly go up? Well, it's because interest rates are being jammed at record lows and the rich are taking out more loans. Sure, some people are going to be able to get a mortgage that weren't before, but a lot more people aren't, of the average Joes. And that means that just percentage-wise, the rich are going to buy up more assets. And even the recession can't cool down New Zealand's red-hot property market. And this is kind of their go-to plan. Again, not in economics textbooks, but hey, let's try and pump up property prices, get confidence going. Everyone likes it when the house is worth, $1 million on paper and they can tell their friends. Maybe that'll get people more confident to start a business. That's kind of the thought process here. Now, obviously, the big elephant in the room is this war of words with China. So we've got this mega free trade deal of a lifetime. Australia and China are both in this 14-country package that they want to sign off on. But recently, things have escalated, and China have come out and said, if you want to make China the enemy, China will be the enemy. This has really, really changed in terms of a few weeks ago, tariffs, actually talking about things in terms of being the enemy, and China, will enforce this, and they are a superpower. They're way bigger than Australia, okay? I'm just not sure why we're going down this path. There's no need to anymore. Be the bigger person and get on with it. It's for the sake of the economy and all Australians. So this package with the 14 countries, 72% of Aussie's exports, 260 billion in 12 months of September. This shouldn't deter us from seeking increased measure of economic sovereignty, reinforcing free trade will hopefully secure supply chains, blah, blah, blah. So this is kind of saying that it's always good to try and diversify in terms of your trade partners. But whether or not China and Australia get things back on track just because they're both in this 14-nation agreement, that's a different story. China have also come out this week and spoken about the Five Eyes, the surveillance that Australia is basically at the head of because we've got less laws around this. So a lot of the US spying agency stuff goes through Australia now, and China are saying they're going to pluck the Five Eyes, pluck them out over what's going on in Hong Kong. So I'm not sure where this goes, but it's tensions are high at the moment. China's angry. Look, I just read this story, but this is on Zero Hedge, front page stuff on some of the biggest websites in the world. People are talking about the relationship there between Australia and China, and the US is going to drag Australia into this somehow. It's a trinamic. There you go. There's a word for you that we're stuck between. Now, China's economy, on paper, they're talking about good growth and things are going well, but papered over a lot of cracks, really. So 900 billion funding gap is going to provide some clues on their stimulus. They've got a lot of bad banks that have already had to be bailed out. And here we've got 6 billion in bond sales that have been cancelled. So some of China's big oil and energy producing companies have started defaulting on these big bonds, and that hurts confidence in global investors as well. So although you might hear that they're gathering steam, and I'm sure certain parts are, I really think a lot of this is more just a lot of stockpiling commodities, even, which I've spoken about a lot. Now, the other thing that kind of pisses off the US even more is that the yield premium over US treasuries hits a record high. So China have been selling down their US bonds. Now that will drive up interest rates normally, but the Fed have kind of kept stepping in and intervening there. So it's these economic warfare games that are being played all over the reserve currency status. And China wants to de-dollarize. It's accelerating. Those bonds that they're selling off are down near 4-year lows now. So they've been selling hundreds of billions of dollars of these. And look, as a tactical weapon, when the US is 29 trillion in debt, if China can sell all those bonds and try and export inflation, for example, if they can get rates to start to rise and get inflation, that's going to really hurt the US. So that is kind of the new what I talk about when I mean economic warfare. Now, Trump's nuclear option is yet to be deployed against China. So he's kind of talking about whether or not they're going to look to crack down on the stocks. So we've heard this before. Delisting or more rules and laws around all the Chinese stocks if they're going to come onto the US and be listed or raising capital of. And China, because their economy is going well, once again, how can they make the US look worse? So stepping out and saying things like the world economy is in its worst recession since the Great Depression, but we're going okay is the hidden message here. SoftBank CEO warns of a Lehman Brothers-like crisis that could crash the global economy. So they really want to try and get people fearful of what's happening in the West. Now, SoftBank millionaire Massa's son is stockpiling cash for a worst-case scenario. So whether or not that's US dollars, I'm not sure. But the SEC are finally considering these requiring the US-listed Chinese companies to use auditors with US oversight. So are the Chinese just going to accept that and allow US auditors to go in and look at the books of Chinese companies? Again, it's not going to happen. It's just another point of friction. US crop prices are going up. China is buying. This is the same when we speak about these stories in Australia where the commodity prices are going up. Are these different countries going to keep selling their goods to each other? Is the US going to keep shipping all that food to China if prices are rising and they've got millions of Americans that are unemployed, losing their benefits by the end of the year? Initial jobless claims re-accelerated last week. The pandemic claims are continuing to soar as well. So the picture's pretty clear now that it's a bit of a second wave of the unemployment statistics. Now, Fed officials have voiced their concerns, and some people are saying that the Fed were really angry this week, and they're not ready to boost the aid just yet. They want these programs to continue, just like Australia have extended them. Now, some of them have been extended, but they definitely think there needs to be more that's done. So Steve Mnuchin came out here and he spoke about the reasons for letting the Fed programs, the SPVs, expire in December. And this is all kind of funky stuff that doesn't really make that much sense. They can pick and choose and move the goalposts like they do with unemployment and other things there, but I'll let you pause and read through those if you like. But it's pretty clear to me that the Fed are now frustrated that there hasn't been more done, but they don't want to do more just yet either, because the market already kind of knows the Fed's there and has their back. Hundreds of these companies that even got these loans have gone bankrupt already. And we're also hearing about a heap of fraud. So, look, it wasn't a perfect program by any means, but the people that needed it the most didn't really get it, all those small businesses. We're seeing things like the largest lineups ever at all these food banks. Once again, are we just going to keep giving China all the food and all our supplies, commodities, if things get really, really bad, a recession or depression in our internal local economies? That's going to rethink trade once again. And you're going to have to ask, well, do you produce enough yourself, or are you super reliant on others if everyone becomes protectionist in a downturn? US household debt is rising, records, refinances are all surging. People are trying to lock in those low interest rates. They're a long way off Australia in terms of household debt, but this is the position that Americans find themselves in. Now, they're talking about home prices being in a bubble over there because of low interest rates and traditional metrics and relative. Then sure, maybe, but it's nowhere near as bad as Canada, New Zealand, Australia, some of these other places. And the mortgage market is the Fed's house of cards. So Americans have weathered the storm, they're refinancing or they're moving out of the cities. That's all fine. But just remember, there's a lot of the undercurrents from 2008 that haven't really been fixed here as well. And a lot of loans that I think the Fed are going to have to step in and launch another massive bailout program. And we're going to see that in Australia as well, I think. Commercial real estate. The mortgage-backed securities, they're going to have to step in and buy lots and lots of those to save the banks. Now, no payment, no problem. It's all well and good with forbearance. In Australia, we saw that till September 2021. You can't get kicked out of your house. And look, all that does is kick the can down the road. And I think things are going to be not just 9 months worse. I think it's orders of magnitude worse if things aren't better by that stage. And that's where they are running into such a huge risk with everything that they're doing. They're kind of always hoping that things are going to get better next year. But when they don't, we're in this worse off situation where you've got to double down, print twice as much debt, or cut interest rates more than you did last time. And we're just sort of reaching the limits of all of that. Fannie and Freddie, the watchdog, is demanding that they have more capital. This talk that they're now almost allowed to go back out in the wild after all the restrictions they had placed on them around the GFC there. But it's these banks that are trying to shore up their reserves for a reason, because the Fed see bad things approaching. We've got $400 billion just in student loans. We've got those forbearances and the mortgages. The number of those little regional banks are dropping, and the banks are getting bigger, the ones that are remaining. Now, they concentrate all the wealth and the power and the profits, and they don't lend to that regional business like when you used to know the local branch manager and he knew your family and he knew your story. Everyone's just now a statistic or a number in a computer when it comes to the big banks, and that's what is making it harder for the small guy on the street to get a loan compared to the big guy on Wall Street that's mates with the Goldman Sachs guy. Oh yeah, you can borrow another $1 billion to do that share buyback. But starting a business, for example, is just so risky and unknown and little. It's not even worth the paperwork for them to do, because you've made the giants in charge. Now, Google are muscling on Wall Street's turf with this new checking account. So everyone, Apple Pay, now it's Google. We see the world of fintech just exploding, as well as in the crypto space. We've got all that DeFi stuff and all the cards there, but everyone wants to get into banking and payments at a time when we've got those super giant banks that we spoke about that are trying to cut jobs, cut physical locations, because they can't compete with the virtual tech software-based online model of banks and payments. Now, for the first time ever, the US dollar is losing to the euro as the payment currency. This is really, really surprising data. So this is from SWIFT, who handle the cross-border payments. Canadian dollar overtook Chinese yuan for 5th position as well. So pretty surprising stuff. I did not think that this was even close, but there you go in terms of global payments. Now, this isn't reserve currency status or debt denominations or anything like that. This is just, remittance payments, cross-border payments, those sort of things. Howard Marks, he's pivoting back to caution after catching the distress wave. So we're hearing these legendary investors talking about a top and talking about all the distressed assets that the Fed are going to have to basically buy, or the companies are just going to default. Now, you've got this other argument that low interest rates means that consumers are better off. And I think that the numbers kind of skew things when you hear stats like American consumers are flush with cash after paying down debt. I would argue that those millions of people in line at the food bank would probably tell you they're not flush with cash. But we do see some people that are doing okay, that are making more money than before, depending on what handout they got. And now they're speculating on Robinhood, for example. So, look, the truth's always somewhere in the middle. More news about the vaccines this week. medical experts saying we could phase this out now that we've got Pfizer and Moderna. We're hearing safety and efficacy things. People are a little bit more familiar with it now and maybe confident to go out. It's been here a while. They're desperate to get back out. And look, is tourism going to pick up? Some are saying it's going to roar back. Others are saying, well, you're going to change your habits and probably not travel overseas and just be a little bit careful, or at least some percentage of people are. So this is a really interesting one. I'm not really sure. I know a lot of people will be so sick of being stuck at home that they will travel as much as they can and travel more, whereas others will be overly cautious. So look, is it going to even out in the wash? They're the sort of things that we want to keep an eye on next year. Now, this announcement gave the stock market a bit of a nudge. Volatile, we saw the knee jerk and then a pullback again. But I think that this is just such a long way off. You know, more studies, the public just aren't going to accept this until there's more data around how safe it is. They're trying to rush it through as an emergency thing, but I reckon that makes it less likely that people are going to take it. So while the stock market might jump, the reality of any change is just so far off. The thing that worries me is that we're going down this path where we just don't have any privacy or rights anymore. And the United Nations are now announcing, biometric digital ID wallet. So whether it's the little, the chip that you're going to have in future, or you've got to have your phone on you, scan your eyes, your fingerprint, get the biometrics, and that'll be like your private key, your access to your data. This is all coming, and unfortunately, they are going to look for things like vaccines in a world of epidemics, and you might not be able to travel unless you have it. That is the scary future, which I do not agree with at all. Amazon, the big tech giants, are getting into the world of prescription medicines now. So they've acquired a company. They're doing delivery services for prescription medications, different rules around pharmacy ownership. In Australia, you've got to be a pharmacist to own a pharmacy. Different rules and laws over in America. Now, copper and a lot of commodities have just been surging off the back of those vaccine hopes, because the thought process is, everyone's going to get out there, infrastructure building, we've got to make up for lost time, so commodities are surging, but we know stockpiling by China is happening as well. Morgan Stanley is saying, risk on, put all your money in the stock market, things are just going to grow, it's going to be great, this recovery. I'm not so sure. JP Morgan, it's funny that all these big banks that make money from people borrowing and lending and taking out loans, obviously they're plugging here that, there's going to be a surge next year, trillions of dollars are going to get unlocked and flood the market, it's all good. That's in their best interest, so obviously take with a grain of salt. In terms of the stock market, here you can see the percent of managers that are overweight equities. It's starting to get up there. Really big jumps recently, so highest since January 2018. But it's the active management that's paying off more at the moment for the S&P 500 index keepers. Now, the big news this week was all about Tesla. But if we, again, look under the hood of what's going on, traders are shorting volatility. This spurs $1 billion of inflows into some of these funds, ETFs. UVXY is one of them, and it's set for its biggest inflows since July. So people are just betting that the Fed put is here. And if you don't know what that means, it basically means the Fed is just giving you downside protection. And the markets are really believing this at the moment. And if the Fed don't do anything, that's when the reaction can be so much worse, because it hasn't been priced in. But even in that scenario, I think investors are saying, well, if it ever gets that bad, that is when the Fed would probably step in again and start printing money rather than let us lose money. So global tech flows, the 6th largest inflow into tech ever, as investors expect the tech sector to continue to outperform. I think the smart money is not really rotating there. They're going into the commodities and looking for that super cycle, 100-year lows in terms of ratio of tech to commodities, all those things we've spoken about. So this was a good article about how, yes, it is the dumb money that unfortunately is in control, moving the markets on pretty low volumes. So Robinhood Army is propelling all these different, thematics. They just love an ETF. Give them an ETF for anything in a narrative, and they'll just invest in it without looking necessarily for, is it even a good exposure or relationship? Just because there's an oil ETF doesn't mean that's necessarily going to track the price of oil that closely, like we saw with USO at the beginning of the year. So you've got to know the little intricacies with all these ETFs as well. Now, as I said before, the big news was all about Tesla. It's been on an absolute tear. It's, in my mind, no doubt that's being propelled by Robinhood traders, but they've finally got into the S&P 500. Now, people are celebrating, but that's actually been a bit of a curse in the past for a lot of businesses. And they've ended up going bust after getting included in the S&P 500. But either way, Tesla fans are very excited about that. Global equity flows. This is the largest 2-week inflow to global equities ever. So when the vaccine news has come out, the world and investors have responded and pushed those chips back into the market. That's kind of what they were waiting for. And we spoke about how much was on the sidelines, and that's now entering the markets again. So a bit of a reflation trade. But why there's all the bulls that are buying all the stocks like there's no tomorrow, smart money confidence is at one of the lowest levels ever. So the smart money is still not that confident. They're being cautious. Insider transaction ratio has dropped again. So this is bearish versus bullish for the insiders. And we remember last week how they'd sold a heap. So yes, it's down a little bit this week in terms of the amount of sales, but they really emptied their bags of shares last week. So I wouldn't read too much into what the insiders are doing there. And you've got to remember that this is all coming at a time when the shorters and even the short hedge funds that do it for a living, some of them that were in the industry for 20 years, they've all been burnt. If good luck being a shorter in this market for the past 6 months especially. No one would have predicted that this rally, but for the past 10 or 20 years, and if the value investors, everything just went out the window. So you could have been doing all the things that have worked for years and years, and you were trying to shorten the market. You've just been burnt basically by the Fed. Now, the Fed deny that there's any relationship between what they do, their balance sheet, and markets. But here you can see that it's just, I think the correlation coefficient is in the 90-something. When the Fed stop their purchases or whatever, the balance sheet stops growing, guess what? The stock market's gone sideways. It is literally perfectly correlated, the main driver, and the Fed continue to deny that they have any impact there. US equity valuation, so this is price to sales. It is once again up there at record highs in terms of the price to the sales. Now, current sales are low. You can argue maybe the market's looking forward past COVID, but either way, the valuations of equities are at record highs in a number of metrics. Warren Buffett's super indicator, he's saying that investors are walking into a trap when you look at all the different things that he looks at about earnings per share growth, monetary policy, this, that, and the other there. So now Goldman Sachs, they've come out and said that there's a huge wave of selling from the pension funds coming into the end of this month, $36 billion of selling. So this is the fourth largest rotation ever. So are they going to be rotating out of all those equities into maybe commodities, maybe some gold, maybe some Bitcoin? But there is a bit of a change in the waters. And it's the Gen Z, which they're calling Zillennials now, very edgy, that are going to change investing forever. So you're hearing about, everyone loves this EPS and being more conscious about the environment and renewables, but it's a lot of other things as well. That generation eats less meat. Many don't drink as much alcohol, smoking. These things have changed through the generations. They love their cryptocurrencies. So look, you've got to kind of look as an investor at, what are the young people doing? Because it doesn't matter what you think and what you're doing. It's the generation that are growing up and coming through with this different technology and life experience. Where are they going to spend their money? What are they going to spend it on? And a lot of it is going to be online and digital. Now, compare that to commodities and the real world, the tangible versus intangibles. If we go down that path as well of renewable energy, like we just touched on, a lot of these companies are the ones that are in the most debt. So in the US, maybe they're going to bail them out, but Saudi Arabia, those Middle Eastern countries, they are going to be so annoyed that the US continually has this advantage and they can bail out their shale oil producers because they don't have the luxury of that world reserve currency. So if the Middle East doesn't have enough profits, they've got too much debt, is that going to really stir things up in the Middle East again? I mean, there's just so many catalysts out there at the moment. It is a bit of a worry. I hope they get sorted, but the markets are just not pricing any of this in like we saw with risk and volatility. America's zombie companies, including those energy companies, 1.4 trillion they've now racked up. You can see it in this chart here, the big jump in 2020, and a lot of these are now in the forbearance programs. It's being kicked down the road, but these are the sort of things where the Fed are going to probably end up being the buyer of last resort. Just $1 trillion there. $500 billion of student loans. Argentina and all these other countries are proposing these things because they don't have the luxury of the world reserve currency. So, hey, confiscatory wealth tax on millionaires. This is the kind of thing that they're going to come after the wealthy in some way or another. So, I'm not encouraging, tax avoidance by these countries, but if you're sitting here in places like Argentina or dictatorships, whatever it is, and there's talk about confiscating your wealth if you're a millionaire, that starts to make something like Bitcoin look pretty attractive to get across borders or to send to your family or not have your bank account bailed in. So the stars continue to align, and we continue to get more and more bullish narratives for alternate assets as well, your gold and silver, but particularly for crypto and digital monies. So for the first time ever, Wall Street are admitting that civil unrest could maybe crash the markets. We've spoken about this in a number of shows, how that's kind of almost the tipping point, the straw that breaks the camel's back that no one's talking about. So people say, can this go on forever? The markets have been going up, the Fed are doing QE, why can't it go on forever? Well, I think the breaking point is other things. It's not just can the Fed print money and can the number on the screen go up. It's inequality gets to this point, wage growth, cost of living, whatever it is. Those things get to a point where people say, I've had enough, and the civil unrest picks up. Now, whether it's in the US or the UK, we've got Boris Johnson announcing $24 billion in spending splurge to make Britain the naval superpower of Europe once again. So in the past, when all else fails, go to war. That's the old saying. But this also stimulated the economy, getting the factories going, producing things. It's going to create jobs, but whether or not this is seen as when all the countries go down this path, is America going to ramp back up military spending just because they need to do something to stimulate the economy? Very, very interesting. So who bought this $4 trillion that's been added in the past 12 months from the US? We touched on this at the start, but we see US government debt held by foreigners. So this is dropping. The percentage of total government debt, here we see that is increasing in terms of Japan. China, no way, they are selling off. But we've also got here US government debt held by the government funds, okay? So these are the sort of pension funds. Either way, it's the buyer of last resort that they're running out of, the marginal buyer. The Fed have printed so much that they're kind of running out of these options, or there's not as many buyers as there used to be. So the US investors and those funds, they're coming a bigger and a bigger chunk, but it's the US Fed, which is just that massive chunk now, that I think are going to have to step up to the plate. So when we see this data here, the amount of treasuries being issued and the Fed are saying, yeah, it's going to be pretty steady in terms of what we're going to buy, I just don't believe that at all. I think the government are going to have to do more than this. It's going to get up towards $1 trillion of bonds that the government are going to have to issue to fund themselves, because the economy is turning down. They're not going to collect $1 trillion magically more through tax or whatever it is. So they're the sort of things that second order effects, civil unrest, recession, depression. Here we can see their balance sheets, a big, nice jump there. So this is 29% of GDP all the way up here to 29 trillion from 13 trillion. Now these are insane numbers that we're talking about. This is only from last year or from current what they're projecting. More than a doubling in 2 years, and I think it's going to be bigger than that. Astronomical numbers. Changing debt to GDP, households, non-financial corporates, and government. So where have we got Australia on this list? I would have said Australia would be far higher than that. Our government debt's not too bad. Household debt to GDP. Oh, this is the change. Sorry, this is the change, not the absolute number. I was going to say our household debt is through the roof. This is total global debt. They're now talking about the figure being well over sort of 350-ish by 2030. Look, I think we're going to get there a lot quicker. Either way, I've spoken about these projections and just man, the little drop in the ocean that gold and Bitcoin is at the moment, these compared to these just staggering figures. And yeah, we know they're blaming the coronavirus. It's going to push global debt to record highs. But before that, they're blaming climate change. It is just the underlying fundamentals that were there already, okay? It is nothing new. 6 powerful signs reveal the future direction of markets. This was a great article talking about the history of falling interest rates. And all these countries are the same. They're going to drag each other down. Rising debt around the world, government debt as well, household debt, S&P 500, less staying power of these cities, the ESG that we just touched on as well. But the last one here that I wanted to show you was these ultra low rates boost household spending. And what they found here that it works until a point, and that point is around 4%. And they start to reverse that effect. So as yields were falling, they find that yes, it just gets people to spend less rather than what we are being told by the central banks. So more legendary investors. This time it's John Malone saying that he's buying hard assets. Property falls into that camp. Betting on all these different currency devaluation. So that is your gold, Bitcoin, your commodities, your real assets. They're the things which we're thinking are going to go into this super bull market. Gold's a hedge against all of that, as well as bad government decisions. More and more of you are kind of familiar with all this as well. And that's why I kind of get frustrated when I interview Peter Schiff and he bashes Bitcoin, or the Bitcoiners bash gold. There's just such a bull case for both for different reasons. Now, this week in the short term, look, the vaccine weighed heavy on the gold price. We had a massive downturn. But because, look, investors said everything's better, we don't need to worry about that risky, and have that gold anymore. We're going to push all our chips back into the stock market because the economy is going to unlock and grow. Now, that's the thought process, but that's all short-term thinking if you ask me. Look at the numbers. We continue to see the trend being up in terms of money going into all the gold funds. Yes, we had this huge week, largest outflows from gold ever from the ETFs, but do not stress about that. I think that they're wrong, and I think they're all going to come racing back in once we spend 25% more currency into existence next year. Okay, so let's get into some of the crypto news, and there's a lot of overlap here with the central bank digital currencies and the like. Before I do, just that reminder, the Knowledge Center, it's all free on Collective Shift, all powered by Nuggets News, guys. Head over and check out the new website and all the different modules we've got over there, adding to them every single day. We did put out the first of our kind valuation research. So we've hired, one of our hires is a valuation specialist from a crypto fund background over in Silicon Valley as well. So he's going to be doing these valuation reports. And we had some good feedback that this was very technical. So we're going to try and dumb them down a bit or do a bit of a summary at the end as well. But this is just another aspect that we can put to our fundamentals, on-chain data, sentiment, add that analysis together. Now we've got some valuations to look at on our favorite projects. We are, this is what I just love to see. This is the direction I want things to go in, trying to become a powerhouse, the one-stop for everything crypto investing related. Okie dokie. So, crypto journalists form an organization. We've got a lot of the big boys here, Cointelegraph, Coindesk, Kraken, Decrypt. They're all getting together to form a bit of a conglomerate. And this is great to see at a time when a lot of other news is going in the wrong direction. The Murdoch media in Australia, the fake news media, as Trump likes to joke about. It's great that we do see crypto media coming together. Okay, so over in Belgium, and big congrats to DigiByte. So they've got this EID program, and this is what I just love seeing. Projects that you don't hear a lot about, hard work in the background, all of a sudden they've got a real world product that is going to get used. So, you can't argue with that. I think everyone loves when we see a tiny little crypto project getting that sort of use case in the real world. Let me know if you're a Waves fan out there as well. For those of you that did see that Ethereum interview, I hope you enjoyed it. It's a little bit of a taste of what's to come with Vitalik as one of 8 guests in the 3-part documentary series that we filmed as well. And that'll be out for Real Vision members and for Nuggets News members in the coming weeks. And then at a later date, it will actually be out for the general public as well, I believe. Okay, so digital asset firm Fireblocks raises $30 million for this influx of customer demand that they see coming. So, look, $30 billion, a lot of money. Galaxy Digital, our mate Mike Novograt's Paradigm. So they want to try and have the one-stop shop, the place to go to for these institutional investors. They're not used to the signing into Coinbase or whatever it is. They really want an advanced product for the storage and trading and hodling for the institutional investors that want something a little bit more. We saw Binance file a lawsuit against Forbes and a few other crypto journalists here, so a little bit of back and forward, but you've got to take a little bit in the crypto world. I think there's just so many trolls out there, and headlines love to get twisted. So look, Binance loves to fire back. One of the biggest bits of news we had this week though was crypto friendly Brian Brooks getting the nod for a 5-year term as the leading bank regulator. So the controller of the currency, we're starting to get more and more people that are in office that are just crypto friendly, that love it. And I think the big rumor was all about Jade Clayton leaving, and is he sort of stepping aside to get someone in, a chairman for the SEC who's more crypto friendly to get a Bitcoin ETF. That's the big rumor. We're hearing about more changes coming to the tax reporting in the US. So a lot of the exchanges will do it for you now, guys. So just be mindful of that. There's rumors that some countries are even going to increase tax just on crypto. I think there's going to be people that want to move out of there pretty quick smart. But how DBS can catalyze the STO revolution. So STOs have been very, very slow to catch on, but we're starting to see Southeast Asia's largest bank, more and more of these businesses or banks that were trying to get these licenses are starting to get them now. So maybe the STOs will get a second wind, because it's just, it's taken 2 years and everyone was hoping that things would be pumping by this stage in terms of tokenizing the world. The SEC has granted digital avatar firm IMVU permission to do their token sale. So look, they have shut down a lot of businesses. They've been pretty busy this year. 56 they've taken to court since 2017. But they're also, issuing the AOK to plenty of companies as well. Hashkey, $2 million round in Twitter privacy tool. So you are going to be able to send crypto and messages across Twitter. Look, are you going to trust them? Look, is it end-to-end encryption? Are they going to give governments a backdoor? Look, they're the sort of things that I would want to know. But being able to do everything from Twitter or Facebook, we're going to have more and more of these integrations, the DApp style programs, and trading is only one of those, private messaging as well. ConsenSys acquired the Truffle suite of tools this week. This is a big focus on the documentary. We've got a whole chapter about making all these tools and enterprise adoption. There's already 600 enterprises building on Ethereum, which is very, very cool. So these are the sort of things that the business world, their developers want to be able to go and just use something that's nice and friendly and has all these tools if they're going to start using blockchain. Circle partners with the this is a mouthful here. Bolivarian Republic of Venezuela. So, long story short, using USDC to aid Venezuelans, getting around the sanctions, getting around the government that were blocking bank payments. And this is what I spoke about that the US could do with the stimulus checks, because once you've got citizens that are familiar with how to use a crypto wallet, you can send them USDC on the alternate payment rails. The digital thick shake theory I talk about, once again, in action. Dell-owned VMware launches an enterprise-focused blockchain. More and more of this stuff is coming for that side of things, the professional world. Bitcoin investigation giant to raise $100 million at a $1 billion valuation. So this is the guys over at Chainalysis. And some of you love to hate them. This was on Forbes. But these guys are providing data and analytics to trace payments and working with the government. So look, some people love their privacy, but this has also become a very profitable, successful business working with governments. And it does catch a lot of crooks as well. European Commission seeking advice for a public sector blockchain. look, they're years behind China and the others, but they're having a crack. In terms of some of our data and privacy, unfortunately, Liquid did have their data breached. So if you're like me and you signed up to Liquid, you could have data out there in terms of, passport, if you use your passport or other documents to sign up as well. So guys, be mindful of that. Always use a password manager, change things up. You've just got to keep such a high standard of security and online hygiene, as we say, as well. And a lot of you only use that to sign up to buy some Red Fox as well, I know, which is unfortunate. Okay, so Zcash halving, that went through okay. This is a major change to the founder's reward. It's dropped it down a little bit. It's going to reduce the supply, which was massive. So maybe Zcash is going to become a more attractive crypto. We've got Ethereum Classic getting wrapped as well. We're going to see more and more of these assets come on to ETH. So we've got wrapped Bitcoin, but we're going to see, wrapped Zcash, wrapped Ethereum Classic. You can wrap anything as long as you've got that company and the software written to do it. The Bitcoin Cash hard fork did go down. The dust has pretty much settled. It wasn't as crazy or as messy as we did think, but it's now up to the exchanges. And look, the main one did retain the overwhelming majority of hash power, so nothing too much more to say there. Microsoft exec joins Engine platform. These guys have been very busy as well. One of my favorites. I can't wait to see what comes from them very soon. And as I mentioned before, you no longer have to rely on Liquid. So for all you Aussies out there, Red Fox got listed on CoinSpot today, and there's $1 million liquidity on Uniswap as well. So very, very cool stuff. They've had some more announcements last week. Some more to come this week, Benny tells me. So keep an eye on their socials. Get that notification when the news breaks, because they have been busy. All right, we're getting there, guys. So a fake Uniswap app unfortunately hurt one of our members. Lost $20,000. This story was picked up by CoinDesk when I tweeted it, but look, guys, I cannot say this enough. You just never give out your private keys. Your password, backup phrase, whatever the scammers ask for, okay? You never type it in, ever. And the only exception to that rule is when you set out to do it yourself at the start of the process. So if you go out there to reboot your ledger or to change your own MetaMask, that's the only exception. You have set out to do it. Because too many people get an email, or they flash up on something, or they talk to someone in Telegram, and then they just hand it over, and then they come to me afterwards and they're like, oh, I knew it was a scam. I don't know why I did it. It continues to astound me. I'm telling you guys, literally every day we get a message from someone that's lost thousands of dollars, that's given away their private key. Even though some of these people have been hearing me say it every day for 3 years, and they're still giving out their private key and their backup phrase as soon as a scammer asks for it. So look, that is really, really frustrating for me to hear. I just hope that people are learning from this, and it continues to not be a problem going forward. But either way, this is something that we just have to put up with if we want to be the custodians of our own crypto. So, look, Uniswap liquidity did plunge recently, and one thing that I wanted to mention here was all about the difference. So I actually think, and I copped a lot of heat for this when I said Uniswap has got good fundamentals, it's a good concept, I like it. And as soon as those Uniswap rewards ended, the amount that was locked up in Sushi started climbing, okay? Those rewards started to leave Uniswap and go to SushiSwap. Now, Uniswap have announced that in a couple of weeks they're going to start rewards again, but I think that a lot of people are underestimating SushiSwap once again. They've got some cool things coming. They've got crypto-to-crypto altcoin paired leverage and some more exotic products. I spoke about it last week, but they are going to surprise people, and I just think that people are thinking of it as a joke or a scam still, okay? And that's what we saw with Wi-Fi. Remember how everyone was laughing at me about that? Either way. Okay, so MicroStrategy, they are exploring some data products now, Bitcoin data products. So MicroStrategy have literally gone all in. It's been the best thing for them in terms of their balance sheet and profit since they made the move, but looking to continue to venture down that rabbit hole. Pickle Finance was the latest one to get hacked this week. It does suck because I think this is another very important project that's just poorly misunderstood because of the name. They are pairing stable coins and adding to the liquidity, as well as a number of other things they're doing with their pickle jars. But whether it's Yearn or Pickle, any of these DeFi aggregators or apps, they're just so attractive in a negative interest rate environment. Who doesn't want yield? So Yearn have done a number of cool upgrades again this week. It started to rally. People were bashing it when it was $7,000, $8,000 the other day, saying it was dead, and it got back up to $30,000 this week. Now, I actually tweeted that out for you, I think, the technical setup, because I'd been reading about all this. And so another great example of knowing the fundamentals, looking at the sentiment that's around, and people making fun of me and trolling me about it. It's down there, the technicals online. Pull the trigger. That one's gone from 7,500 to 30,000. 300% win in a couple of weeks. I don't mind copying shit when I'm making 300%. So happy days. A good thread from DeFi Guide about some of those upcoming changes as well. But a really well thought out project. And I know, look, even the guys that people love to bash Andre. And people love to bash the sushi chef after he dumped his tokens. But he's been back there and he's been busy. And a few of the people that jumped on the call, the developer call, were talking about that as well. All right, so some more Ethereum news here. We've got Ethereum addresses holding at least 1 ETH hits an all-time high. Very similar to Bitcoin. These are just great metrics that are all continuing to climb in the right direction. Dex aggregator has rebranded to Slingshot after raising $3 million from Coinbase Ventures and others. So this was previously known as dex.ag, but I think there's just too many Dex named projects in the space. Another unfortunate hack we saw this week was the O dollar, so Origin dollar, $7 million this time. I feel like it's that board where it's like, The Simpsons, days since we've had an incident at home as work. It's like days since we've had an Ethereum DeFi hack, or days since someone has been scammed and handed over their private keys, guys. So look, you got to stay savvy, stay alert out there. Never put more money in these things than what you want to play around with, because they are just so experimental. OKX is finally about to resume their withdrawals next week. Apparently they've got all their reserves. So I think that just was maybe one individual, the reason behind all of that. This was a great report from Dharma Capital, all about ETH 2.0. If you are interested in that, dive in. But what we are seeing is just brilliant coverage. And this is the sort of stuff which the institutions, the smart money, want to read. They've just got their head around Bitcoin for a lot of them, but they're going to understand Ethereum in the next 12 months. Some great articles about the shortage of Bitcoin this week. So you've all seen these charts about the amount of Bitcoins on exchanges and how that's sort of heading down. Whereas in the past, when we had these big rallies, we often saw that people sent their coins to exchanges. And that's just not really the case this time. So in terms of Ethereum, we've got 3 whales that are responsible for 25% of that staked ETH at the moment. So this is some of the ETH that is on the move. I think we're going to get there at the moment. I did say that the whales would step up if they had to, but they'd prefer for things to be decentralized. I've got a couple of these out of order, sorry guys, so I do apologize. So ETH2 staking, the foundation is going to sponsor a lot of these projects. I've got that episode coming out about the different ways you can stake, the different custodial versus non-custodial, and how they all work. So I know plenty of you are looking forward to that one. SoftBank CEO says he doesn't understand Bitcoin. We've still got a few naysayers, I guess. I spoke about Mr. McGlone, and he's talking about $170,000 Bitcoin in the next 2 years. We had some massively wild targets this week. Jamie Dimons of the world, not my cup of tea. So these are the kind of contrasts that we're seeing. But remember, where are their interests? Here's that article I mentioned at the start about Jay Clayton stepping down, paving the way for maybe a Bitcoin ETF. Bitcoin Poker Network is now giving out 95% of their payouts in Bitcoin, so 160 million a month. These are enormous numbers that, it's starting to soak up all the Bitcoin supply, put it that way. Anthony Saramici, he's got a $9 million fund. They're looking to get exposure to digital assets. So I think people are often forgetting that these announcements, whether it's PayPal or whatnot, a lot of the time it's Ethereum and it's beneficial for Litecoin as well, or whatever they've listed. So this is why we're starting to see a bit of an alt season at the moment, because it's just been so much Bitcoin. Ray Dalio saying that he might miss something. Look, I would love to chat with Ray and try and convince him. I had a chat with Peter Schiff. I couldn't quite convince him, even though he actually needs Bitcoin more than anyone at the moment, which you'll hear and understand in the interview. But I think Ray's going to come around eventually because he's so bullish on gold, and he's friends with Stan Druckenmiller. Bitcoin's market cap hit a new all-time high. If you don't understand how that can happen when the price is lower, it's because of the number of coins. So remember how many coins we had back here? Was it maybe 16 million? 18 million back then, and what are we now? Around 19 million or so. So very similar in terms of the number of coins, but that subtle difference makes a big difference once we look into that market cap. Last week we had Game of Thrones star Macy Williams tweeting about Bitcoin. Huge numbers thrown out there from a number of players. Okay, so I just want to share that one article with you about the huge predictions made by Citibank. Here it is. So Citibank analysts, yes, they said $318,000 by December next year. What's that, a 20-fold return in a year? Look, let's hope they're right. One of the things that is happening, though, is this liquidity held on exchanges. So I mentioned it before, coins on exchanges going down while people are just constantly buying. This is very different to what we've seen in the past. We've now got senators that are praising crypto as a store of value. So even though we do have the naysayers and all this positivity, it's in your face no matter what, even if you're not interested in crypto. And now we've got the central bank digital currencies. Look at these are the number of mentions, and whether it's positive or negative. Back in 2017, this was barely anything. It didn't exist in 2016. And it's just absolutely exploded recently. So people, average Joes, are hearing about these central bank coins or crypto. They're hearing about it from US senators, from Game of Thrones stars. It's just everywhere at the moment. Deutsche Bank is telling their clients that it's increasingly noticeable that people are choosing Bitcoin over gold to hedge against the dollar risk and inflation. So look, Peter Schiff absolutely hates hearing stuff like that. But it is the truth. It is, to some degree, there is some amount of people that are choosing Bitcoin over gold. That is where I think maybe it's a little bit too divisive, and we need to be on the same team if we are to convince people like the Ray Dalios of the world that they're missing something. So rocketing Bitcoin stakes its claim for this refuge, and these are places like Bloomberg that are putting out these headlines. So I think tying this all together, what I did want you to understand is that when we see this constant buying pressure coming through the PayPal app in terms of $26 million a day, I think it is, don't forget that some of these 20 to 25% of these purchases have constantly been ETH as well. So all that money has been going in and causing a huge increase in Bitcoin's market cap to the tune of 100 billion. But that money can make a huge difference in percentage terms for the other coins as well, which have started to see really big gains this week. So Bitcoin's realized value versus its market cap, if we just went back to that equal metric weighting from back in 2017, when people haven't realized their profits yet, we'd already have a fair price of Bitcoin around $30,000. So that's honestly where I'm looking at the moment because of how big the constant buying is. I think we had so many things align where people didn't get a ticket on the train, and that was something that I just pushed so hard for members. And if you're in my group, you'll know that we were fully on board the train. We didn't want to risk it leaving the station without us. And so many people were talking about things like the CME gap. So I did a write-up on that back in September saying that this was the first CME gap that I didn't think was going to get filled. Everyone thought we're going lower when COVID happened, or they were scared. Everyone waited for a pullback on the way up. And guess what? It didn't really come. We've just been constantly grinding higher. BlackRock CEO, he's coming out and talking about Bitcoin replacing gold. It is non-stop, just the technicals, fundamentals, the sentiment, okay? And that is what has resulted in just such beautiful, beautiful moves across the crypto market. So I'm just going to open up my default chart layout here for you, and I want to show you Bitcoin dominance over on charts.cointrader.pro, because sometimes we get a glitch in the TradingView version. So has Bitcoin dominance topped and rolled over here? It is starting to look so, and this would be very, very good news for altcoins. And Bitcoin's had a tremendous run in terms of its price. This is the ETH Bitcoin ratio. Let's go to the daily chart here. It has finally looked like it's put in a bottom now, and it's had a very strong impulsive move after forming a bit of a double bottom here. So ETH tends to lead the way. ETH itself has been a powerhouse lately. What's this? The daily. So just last week, $440, and I sort of said, look, we could get to 600 by Monday as a bit of a joke a couple of days ago. And I think we're nearly there. What are we? Getting up towards 590. So this has been a huge run. But don't forget, Bitcoin's gone harder. So weekly chart of Bitcoin. Look at this parabola. Let's just quickly put it on full screen. This parabola is starting to get here. So look, we're in the early phases of this. I think we're getting pretty close to a top. You can have a look at the all-time weekly closes, and this varies slightly whether you're looking at Binance or Coinbase or Bitfinex or whatever it was from back in the day. But this is kind of the level where we're touching and tapping at the moment. But look, everyone was saying the same thing about, remember, 16K and 10K, 14K, and I kind of started to say that I think some of these levels are going to be like a knife through butter just because of the fundamentals. And people have not got that pullback they wanted. So they were after these from back here. Let's put it on long chart. They were after these, nice, deep pullbacks each time. Not happening at the moment. And so I honestly think that we can blast through 20K. We can get to 30K. And there is just no reason with all these fundamentals why we can't. So look, in the overall scheme of things, I don't mind a pullback. It's healthy. It's to be expected. You don't want to be leveraging long and that at the moment, but I know for a fact that there's so much money on the sidelines that's just getting interested again. They're messaging me. They've been waiting for a pullback. It didn't come. These are all the reasons why we don't really have a deep pullback, along with what I spoke about in this morning's flash update, that we've got constant buying from bots and institutions that are just dollar cost averaging in, okay, and that smooths out the market. We've got no more BitMEX bullying the market around. So look, I'm very, very excited with what's going on. I think alts are just positioning themselves for a run. They might have a bit of a pullback if Bitcoin does, but then I think once Bitcoin has found its range and it goes sideways, you can really expect, particularly the DeFi coins, how well have some of these blue chips performed like I touched on. So look, well done to the XRP crowd. This was a trade that I personally nailed as well. So I know people say I love to hate on XRP, but when there's a trade there, I'm going to take it. Litecoin, it is just so amazing to see some of these old school OG altcoins all pumping, as well as the DeFi coins. So guys, I hope you've enjoyed that. Sorry it wasn't out on a Sunday like normal, but back to normal next week. Members, I'll talk to you tomorrow. Have a good night. Smash that like button. Subscribe if you haven't already. I'll talk to you again soon. Cheers.